Microsoft reported earnings and the stock crashed, but then it recovered and ended up on the green. Hello everyone, welcome back to the channel. Today I want to talk about Microsoft, what they reported, why the stock crashed and then recovered, and what we should expect this week after this earnings. I'm sorry about my voice right now. It's 6:24 a.m. as you can see. So I just woke up basically to film this video. But let's get started with the video. As we can see here, the stock was down already 2.66% during the day. But after they reported earnings, the stock basically crashed or went down a lot, 4.78%. And with time, they reported earnings and we were waiting for the earnings call. And suddenly, it went up massively after or during their earnings call. As we can see that it went up 6.32%, ending up yesterday. But now pre-market hours is up 3.71%. It's already at almost $300 again. We can see that it is at 3.64% up at the moment. Pre-market hours at 5:25 a.m. East time. I'm in Venezuela, so it's 1 hour later. But market cap is $2.1 trillion and a PE ratio of 32.27. If we check it and compare it on a historical basis, we can see that it is a little bit high, but it has been going up since 2015. As we can see here, it has its peak and then went down, but it is going up since then, as the stock has been going up a lot as well. I do have a position in the stock, which I'm going to show you guys later. It has a 52 weeks low of $224 and a 52 weeks high of $349 per share. Microsoft bids on earnings and revenue deliveries upbeat forecast for fiscal third quarter. Microsoft reported earnings of $2.48 per share versus $2.31 per share expected by analysts. As revenue, they also beat revenue of $51.73 billion versus $50.88 billion expected by analysts. The revenue increased 20% year-over-year, according to the statement, compared with almost 22% growth in the previous quarter. Microsoft net income swelled by 21% to $18.77 billion. As we can see here, what I just told you, Amy Hood, Microsoft finance chief, eased investors' concerns on the earnings call, indicating that demand remains strong across much of their business. Because after they didn't post their guidance or their forecast during their earnings, but they were going to say that during their earnings call, people might have got worried, believing that maybe the forecast for the next quarter is not going to be that good. That's why they need to do an earnings call in order to explain us why it's not that good, and maybe because of supply chain problems that are going around. So people got worried, and that might be one of the reasons of why the stock dropped that much. But during the earnings call, they explained everything, and we can see that they eased investors during the earnings call. But Hood said the company expects a revenue of $48.5 billion to $49.3 billion in the fiscal third quarter, which is the first quarter of 2022, but it is already their fiscal third quarter, topping $42.23 billion consensus. Obviously, it's very nice. It is above what analysts were expecting. And Hood said the company now expects full year operating margins to widen slightly. This might be a good sign, meaning that all these supply chain issues might be easing out as well, or at least getting to normal levels. I believe that it will take a lot of time. I believe it could take for the whole year to get to normal levels, but they reported a nice growth, and over analyst expectations is a nice sign. Now, in this chart, we can see how their products did individually. Their Azure, which is their cloud business, increased 46%, which is excellent. Obviously, we can see that it's below what it have been happening in the past 4 quarters of 50%, 50%, 51%, and 50%. And now they report at 46%, which is still a nice growth. And they actually beat analyst expectations. So analysts were already expecting this kind of growth. Their Office 360, 19%, Dynamics products, 29%. Their search and news advertising, 32% up, a little bit down from the past 2 quarters, but still up in comparison to the third quarter of 2021. Windows and commercial and cloud services 13%, and their Xbox and content, which we know that saw a huge growth during the pandemic of 65%, it's at 10% right now. It is not that big, but obviously it's way better in the past 2 quarters. And we know the past 2 quarters, they had all these chip problems, manufacturing, and supply chain issues. As I said, the revenue from Azure and other cloud services grew 46%, ending a streak of 4 quarters or above of 50% mark. The expectations was 46% according to CNBC. So what analysts will pulled by Street account had been looking for 45.3%. So that's actually good. I do want to wait and see how Amazon did with their WBS and Google did as well with their cloud business in comparison to the previous quarters, as it might be a trend at the moment. As I said, Microsoft stock turns green after strong sales forecast, reversing a post-earnings decline because shares fell 5% after hours trading following the release of the results, but reversed to a 1.2% gain after Chief Amy Hood shared Microsoft forecast in the conference call. What I just told you, we already know that the revenue grew 20%, operating income 24%, net income 21%, and diluted earnings per share 22%. But when we check their income statement, we can see that it is very, very good, and that's why these big tech cap companies are so good at the moment, because they are incredible. Their financials are incredible. They report a total revenue of $51.7 billion, $20.7 billion for their products and services, another $30.9 billion, which you can see that both grew, but we can see that the most growth came from services and other, as this grew about 6% and the services and other was about 20% or 30% if I'm not mistaken. But something that I like a lot about this company and almost all of the big tech cap companies is their gross margin. They spent $6.3 billion in products to save $20.7 billion. They spent 6 to receive 20. That's the dream for every company. In the service and others, they spent $10.63 billion to make $30.95 billion. That is an excellent margin. As we can see that the gross margin was $34.7 billion out of the $51.7 billion that they reported. That is a gross margin of about 64% if I'm not mistaken. And we can see the growth that they have been having year over year. From $43 billion to $51 billion, and the gross margin from $28 billion to $34 billion. After all these expenses, they put an operating income of $22.2 billion, all the way up from $17 billion. And finally, their net income grew almost as well 20-something% to $18.7 billion. Their balance sheet is another thing that it is incredible. They have total cash and cash equivalents of $20 billion, up from $14 billion, and then short-term investment of 104, which decreased a little bit from June 2021, but still have total assets of $340.39 billion and total liabilities of $120.37 billion. As we can see that they only have a long-term debt of $42.2 billion. If we divide their current assets, 174,188 divided by total liabilities of 77,510, that's a current ratio of 2.24. That is excellent in my opinion. Is incredible as a company. Now, also remember that Microsoft reported that they are going to acquire Activision Blizzard to bring the joy and community of gaming to everyone across every device, as we know that they have been investing a lot of money into gaming in order to expand even more that industry, as we believe, and they also believe, that the gaming industry has a lot of long-term potential. And obviously they are trying to take advantage with that, with Xbox, with Minecraft, and now with Activision Blizzard and more. So obviously that is a good sign, but we will have to wait and see until that deal happens, because it is not confirmed until they actually do the deal. I have a position in this company right now, which is up a lot, and that's why one of the reasons why I suffer so much and I don't add that much to this position. As we can see, it's only 2.32% of my portfolio, so it represents almost nothing. I do regret obviously not adding more before, as it is up 118.51% at the moment. as my average cost is $137 per share. That's an excellent price, and I would love to see it at that prices, but that would be over 50% drop for Microsoft, so I don't really see that happening. But below $200, where it was yesterday, was actually below 250, 240. I was expected to see those numbers in order to start analyzing again the company. But now that it is at 300, I will have to analyze it again and rethink my additions. Maybe I'll add a little bit, as it only represents 2.31% of my portfolio, but I would not add right now that it dropped so much and then went up so much. So I would wait a little bit over the next for the rest of the week or the month. I do have to say that this is great news, because after Netflix reported earnings, the market did not like their earnings and went down a lot. As we guys know, it was one of the reasons why the stock dropped that much on Friday and on Monday and today and yesterday. But this is good news. Obviously, we're going to wait and see what happened today with Tesla and tomorrow with Apple, which are other big cap companies, and that's going to give us kind of a sense of what the economy is doing at the moment, how the supply chain issue is doing, how the chip manufacturing issue is doing, and all that. So in my opinion, it was a nice earnings report. It was just as expected, so it was not above expectations by a lot, but it was just as expected, and that's good news. Both their earnings and their forecast, which Netflix was not able to do that with their forecast. Let me know in the comment section below what you believe about, what you think about this earnings. I will leave you here a video on stocks that I have bought this month of January already during this correction, this crash, or this downturn. If you want to go and watch it after this video, and here for you to subscribe. Thank you, and see you next time.